The Atlanta economy is finally showing some signs of life, but the local apartment market, not so much. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your Atlanta update. The good news for Atlanta is that the local economy is finally showing some progress. It was hard hit during the recession, but it's seeing some pretty good numbers now. Nearly 58,000 jobs added in the past year. That was the fifth largest total in the country, and the 2.5% growth rate ranked 22nd among the core 100 metros, and the trend here looks good. As you can see, the annual employment growth number has trended upward over the past year and a half or so. That is good to see, since growth prior to that had been pretty flat, and that's been largely the story nationally as well. Of course, there is a long way to go in Atlanta compared to where we were prior to the recession. Atlanta is still down about 80,000 jobs on net. Nonetheless, good economic growth of late, but you wouldn't know it by looking at the most recent data from the Atlanta apartment market. In fact, there are precious few signs from the apartment data that the Atlanta economy is doing well. Let's start with occupancy, still in very weak shape, and it got even worse in first quarter. Occupancy fell 90 basis points quarter over quarter. That was the worst performance among major markets nationally in Q1, and it was Atlanta's worst performance since 2008. And of course, anytime you're comparing performances back to 2008, that is not a good thing. In Q1, the declines were widespread, not concentrated in any one group of submarkets or product age groups. In fact, every product age group and nearly every submarket saw occupancy drop. Year over year, though, the trend is still pointing upward, growth of 70 basis points in the past 12 months, but that overall rate still terrible, just 91.5%, one of the weakest readings in the country. And the rent change numbers aren't much better. Year over year, same-store rental rates climbed just 1%. That was Atlanta's weakest performance in 9 quarters. And with all those vacancy issues, Atlanta just can't seem to generate any momentum in pricing. And here's what is even more concerning for Atlanta. Typically with Atlanta, we'll point out that it's a very bifurcated market where the top end of the market, the urban core and the 400 corridor are outperforming the rest of the pack. And that's still true, but they are just not seeing the same performances that we saw last year, particularly on the rent side, and occupancy has dipped downward in Q1 as well. In downtown Midtown, for instance, rents were up just 1.5% annually, and occupancy fell 190 basis points in the quarter to a rate of 93.7. By comparison, occupancy in that submarket a year ago was around 95%, and rents are going up 5 to 6% annually. And we see similar trends in looking at top-tier product across the metro area. In Atlanta's 2,000-plus stock, occupancy dropped 120 basis points just in Q1, and rents were up just 1% annually. And this is a bit surprising to see because this is one market where apartment construction really just hasn't picked up very much yet, aside from a few mostly urban submarkets such as downtown Midtown and Buckhead. But we thought that lack of development would allow the top end of the apartment market to fully recover and thrive for a couple of years before new development still really started to kick in again, and that just hasn't happened. So clearly the for sale sector is playing a big role here again, as home sales are climbing, and of course the shadow market of single-family rental homes continues to play a huge role in Atlanta as well, and it will for quite a while. And that's what makes Atlanta's forecast so difficult to pin down. The bottom half of the market does seem likely to continue to struggle over the next year unless job growth gets meaningfully stronger. But that top half of the market is really difficult to figure out. Given the underlying fundamentals and given the recent job numbers, even with increased home sales, it would appear that the demand should be strong enough at the top end of the market to see some better rent growth in those segments. So if that happens, Atlanta could outperform the expectations that we have it. Our baseline outlook is for occupancy to climb 70 basis points and for rents to jump 2.3% year over year for Atlanta overall. And with that, I also want to point out that MPF Research is hosting our Southeast Apartment Market Conference coming up in Atlanta on May 21st. And so we'll be talking a lot more about Atlanta and some of the other major Southeast markets as well. So you can put that in your calendars. And until next time for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.